Good afternoon to those on the East Coast and good morning to those on the West Coast. My name is Felix Shipkevich, and I welcome you to another series of our firm's webinars. Today, we're going to do a webinar focusing on consumer lending in the debt settlement space. I'm honored and humbled to be joined by my friend and colleague, Camilo Concha, who's also on the board with me on the Consumer Debt Relief Initiative, CDRI, and I'm going to allow Camilo to introduce himself.
Thank you, Felix, for the kind words. Really appreciate it. So just gonna give you guys a quick background on me. I founded LendingUSA about 5.5 years ago. We started as a company who does point of sale lending. We have about 10,000 merchants, and along the way, we decided that there was a big need for us in the debt settlement industry. So we started doing debt settlement financing. We have processed over $10 billion of borrowing requests. We are a nationwide lender. We work through Cross River Bank. We loans between $1,000 to $35,000. We're very focused on customer service. So we have a really high rating of 4.85 stars. We also have been working closely with our debt settlement partners to grow our business. As a way of background, I'm the current chairman of YPO Beverly Hills. I'm also the treasurer of CDRI, an organization that obviously is focused on helping the industry move forward. And obviously, I've gotten a lot of awards throughout the years. And I'm really, really happy to be here with you guys and sharing some of my learnings and thoughts on lending for the debt settlement industry. So thank you, Felix, for introducing me, and I'm very happy to be here and appreciative.
Thanks, Camilo. Appreciate a little bit about myself. I see a lot of repeat listeners, but for those who are new, I am just a regular Joe, as they say. I'm an attorney who enjoys practicing law. I represent companies from Fortune 500 companies to startups. A lot of focus is on fintech, banking sector, debt settlement, credit counseling, credit repair, payment processors, and even crypto, which is a subject matter that I teach every year at Hofstra Law School. In any case, I enjoy doing these webinars, and before we proceed with the substance of this particular event today, it's going to be a little bit different from the previous ones, and I wanted to do a little bit different. Typically, myself and an associate or partner in my firm will go through a fairly comprehensive laundry list of laws and legal precedent, and from time to time, I'd like to take a break. And I thought of a very interesting subject matter, one that we're discussing today, which is lending to consumers who are participating in debt settlement programs. And Camilo, I've known Camilo now for a number of years, and he has a very reputable company, and truly a pleasure to work with LendingUSA employees, and that's part of the reason why today's program is going to be a little bit more different, and I hope you get a chance to learn what Camilo's company does and how they service consumers, how they work with debt settlement companies. And at the very end of the presentation, I'll touch upon some of the key federal laws that you should be mindful of when you get into this space. But this is going to be a little bit different than typically we discuss. Now, a quick plug. My firm is holding a regulatory workshop in Costa Mesa, California, on November 7th and 8th. It starts on the 7th with a legislative update, followed by a happy hour, a lot of networking opportunities, and then we have a full day, November 8th, which is a Monday, starting from early in the morning, and we'll finish off at around 6 p.m., full of content about the regulatory side of the debt settlement industry. We'll have a very, very comprehensive program, and whether you are new to this space or have been in this space for a long time, we always try to bring fresh and new content. That's what we did in 2019. We had a pretty significant participation from over 40 companies that came out to the West Coast. to our event, and we hope to see you there. And just so you know that the early bird special rounds out on September 17th, where you save $200. But anyway, you could find more information on debtreliefwatch.com, or you could email me subsequently, and I'll send you information. Anyway, here are the topics of discussion. First, I want to focus on the background of LendingUSA. Then Camilo will focus also on the role of lenders in the debt settlement space. And as I mentioned a few minutes ago, we will finish with the regulatory issues that you need to be mindful of. So I will turn it over to Camilo, and maybe he could tell the group a little bit about LendingUSA and go a little bit more into details, what it is that you guys do.
Thank you, Felix. So 2015 is when the company got started. We have about 10,000 merchants into our platform and done about $10 billion. Good news about our business is that we start as a point of sale company, which means we're used to working with merchants. In our world, debt settlement companies will be our merchants as well. So we built a platform that allows debt settlement companies to work with us seamlessly. So it's all part of one ecosystem. So you'll have access in our platform to be able to submit, to be able to see what's going on all in one place, to be able to see what how the loans are happening, how the consumers are behaving. And the platform in general is just, it's streamlined to help you guys out, make this process easy so that you can provide a good service for your merchants, right? It's an easy to use platform. It's one point that you guys can work with us. And at the same time, we can provide you all the feedback from the clients and make sure that everybody's taken care of. Our loans range between $1,000 to $35,000. One great thing that we have going for ourselves is that the loans that we do, they all have a 6-month zero interest promotion program built in. So it allows people that take a loan that if they want to pay it off early, they can get some of that interest back within that 6-month period. So that's always been very helpful, a great tool that we have for the merchants and the consumers as well. We are very focused, as I said before, on our consumer ratings. We right now have 4.8 out of 5 stars. We really focus on making sure this program is a win for the debt settlement company, it's a win for the consumer, and it's a win for us. And that's why we feel really passionate about this. We feel that this is a great tool for consumers that really chose not to go other routes and through bankruptcy and debt counseling. It's another tool that you guys have under your belt to be able to help consumers get them back on their way of a successful financial life. Next slide.
Great.
Please.
Yep. Okay. So now let's talk about the role of lenders like LendingUSA in the debt settlement space. And let's go through these questions. We've put together these questions specifically focusing on debt settlement companies who are contemplating whether or not to offer consumers services, lending services, and to partner up with companies like LendingUSA. So, which begs me to ask you the first question. What role do lenders like LendingUSA play in the debt settlement space?
Yes, this is a great question. So for us, right, what we realized early on in the debt settlement company, in the settlement industry, is that there are 2 or 3 players that are usually the larger players that have their own in-house financing programs. But we realize also that most of the mid-size and smaller players don't have access to a lending platform that would allow them to be able to scale their business. So we figured that we fit a role of helping creating an even playing field for everybody to be able to compete with the larger players. We help consumers and debt settlement companies work together through our lending platform. And our goal is just to help, the medium-sized guys, the smaller guys come together and have a chance to compete, because, in this day and age, if you don't have an actual lending piece, it's harder to compete. So we want to help you guys partner up and help you guys scale your business the same way that the bigger guys are doing, by offering the products that we have right now as far as financing for your clients. So we feel that we're sort of on the side of the medium, smaller guys, and we want to help aggregate that industry and help them compete.
That's great. And I could tell you, as just an attorney in this space, I think that's definitely a void that you're filling by focusing on small and mid-sized companies, just because getting lending licenses is, not a very simple process. You have to be mindful of both federal and state regulations. You also need to have at least one or more banking relationships as well, and those are not as easy to come by. So that's great that you guys are trying to focus on that. So how does a consumer qualify to participate in a lending program like yours, and what criteria does LendingUSA use to qualify a consumer?
Great. So the first thing is, obviously we want to make sure people are employed, right, to be able to participate. That income is a very big driver of what we do, right? So they have to make sure that they're employed. Also, we want to make sure that they have been in your program for at least 6 months, and they have been on time on their payments as far as their savings account. I think that's really important. It shows that people really are focused on getting out of debt. So we have a 6-month threshold. We want to make sure that there has not been any changes or NSFs in the past 3 months before you guys submit your client to us, right? We want to make sure that the clients really feel good about taking a loan, right? That they really feel that this is the right position for them to take, and are people that really want to find a way to consolidate and get out of debt. So those are the things that we look for, but income is a very important driver. You may be in a program for 6 months, but if you're not employed, we can obviously not offer that. So we do check income, make sure they're gainfully employed. But for the most part is that, as well as the 6 months in the program. And then we have algorithms in the background that check to make sure that these are candidates that we feel can qualify for our program.
Great. So once someone contacts LendingUSA and they said, I'm interested to participate in your program, and you tell them that, look, you have to make payments without any NSF for 6 months, and you have to be employed, obviously coupled with other variables, what does the actual consumer underwriting process look like? Can you give some details?
Yeah, I can give some details. So normally what happens is you guys will provide a link to your client that will have an application for us. That application will get filled out by your client and get signed by the client. It'll come to our underwriting sort of process. As they're navigating through that process, we will require for them to provide us proof of income, right? So we do that. We double check the income, make sure they're gainfully employed. We run our numbers on the background, and we provide an instant sort of offer as to what we can do for the loan. Once we're able to double check the income and we get that information, we will let the client know how much they're approved for, and then they obviously have the decision to make if they want to move forward with the program or if they not want to move forward with the program. If they want to move forward with the program, then what we actually do is we basically have them sign a loan contract, and then we take those funds and we send them to the special purpose account, where you guys can start settling those accounts that you normally do. We obviously get a list of the actual creditors that are on owed, and then you guys provide us reporting back on all the settled accounts, and then that's how we reconcile our business. And then obviously our goal is to get all the accounts to be settled and paid, and we work with the debt settlement company to make sure that we achieve that. And that's pretty much the process in a nutshell. It's a pretty streamlined process where the client provides information, and then we obviously interact with the debt settlement company to make sure that everything that was provided was settled successfully, and the client is obviously happy with the transaction.
Gotcha. You just mentioned that you work with debt settlement companies. Why don't you tell the listeners of what does the underwriting process look like for debt settlement companies? I can't imagine that you just let everybody in, right? So there has to be a vetting process. Can you talk about that?
Yes. It's definitely, obviously, we are a very compliant company. There is definitely a vetting process. We basically look at the policies. So we request policies that you guys have to deal with your clients. So there's numerous policies on how you deal with a client. We look at disclosures that you guys provide on your website. We look at how you guys go about acquiring your clients. We do monitoring, but we basically do a full assessment to make sure that you have a compliant company. And we look and try to find what gaps you guys may have, and that's where we basically would request information that you may or may not have, and that's when you can work with Felix or whoever you guys work with in your compliance department to make sure that you guys have all the processes in place to make sure that you are able to work right as a debt settlement company for lending. It's not a fast process. It usually takes about 2 to 4 weeks, depending upon how compliant your company is. We normally work with your compliance department on this. But this is important because this is not just like, we don't just talk to somebody and just give them a loan. We need to make sure that you guys qualify as a partner, that you have a compliant company. There, the larger companies like Freedom and all those work with the same bank as we do. So we want to make sure that the bank requires to make sure that the companies really have a solid foundation on the compliance and process side, so that we can accept them and do a transaction. So it's an intricate process, but it's a very helpful process because if there's something that we find that may not be compliant, that we can talk to you guys about and work through it. But we definitely want to see a sort of a good view of your business and what you do. We provide you with a checklist of what we need, and then we just work with your compliance team, our compliance team, on how to get you guys approved.
Excellent. And it's funny, I tell you that the word compliance has, if I could be a little facetious here, has almost a lot of negative connotation, or people are like, oh, compliance once again. But one of the things that I really appreciate about having worked with LendingUSA is that you guys do a pretty thorough due diligence on a debt settlement company. After all, your banking relationship with Cross River, your licenses are very, very important. And I think there's some debt settlement companies just don't appreciate how much work, time, and effort and money it takes to actually set up a lending company like yours. So
yeah, and I don't want to add to it. Obviously, we want to make sure during that process that we can only work with companies that obviously get paid as they settle the accounts, right? So we cannot work with upfront fee models. We want to make sure that the disclosures are properly done, that the website and everything else works. And remember, this is not a little thing. This is like a full-on tool for lending that you guys are getting access to that is fully compliant and fully vetted. So we definitely spend some time there, but it helps everybody. And I think it helps everybody keeping the program going and make sure that it's compliant and that we meet all our regulatory sort of requests as they come to us. So yes, it's definitely an important part of what we do, but we're helpful in the sense that we're trying to work with you guys as best as we can to help you guys get there. So it's something that definitely is important to us.
Great. So let's assume Felix is, working with a debt settlement company, and Felix made 6 months worth of payments into the program, and Felix is employed. I'm obviously only using my name for this example. And, I've been vetted by LendingUSA, and you give me an offer. What happens next, right? So let's say I have, let's say hypothetically $25,000 worth of debt, and I'm working with XYZ debt settlement company, and you just approve me. What happens next? How do I get the benefit of it?
Yeah, so once we do that, the first thing we do is we set up a kickoff call, right? In which we will be able to talk to your team. We help you by providing you with the scripts that show you how compliantly be able to talk about the debt settlement finance program. We spend time with your accounting team to make sure that they understand how the accounting works, to make sure that all the payments that we make get settled. So we do a kickoff call. We have a training team that spends a lot of time with your company initially to just make sure everything goes the right way until you guys feel really comfortable that you guys can go on your own. But we do a lot of shadowing at the beginning, and we just break the process in small pieces. It's a pretty streamlined process, but we want to make sure that we really help your company figure out how to put this together, how to offer it. So we provide those scripts, which is really important. And then based on how you guys work, we give you the best possible scenarios on how we can do business together, and then you guys choose what's best for you, right? So we're obviously, not everybody works exactly the same way, but we try to make sure that we use our technology and what we build to the best possible way to make your company successful. So we obviously, each company works a little different, but we work very, very hard to make sure that we do the best that we can to make this a seamless process for you and your clients.
How does LendingUSA work with debt settlement companies? How do you work with them, if at all, in connecting consumers, getting consumers connected with LendingUSA?
Yeah, so obviously the way it normally works is, through our platform, we'll be able to, you have the opportunity to give us information, not names or numbers, but just information. Provides a file with a number per client, and then we run them through and we tell you guys, this particular clients have a really good chance of getting approved by LendingUSA. So you may want to contact those clients and tell them about the program. And then either you can do a live transfer or have the client apply to us directly, and then we just take it from there, right? And then we'll notify you guys through our system when they get approved and the funds are ready to be funded to the special purpose account, so you guys can start your regular process. So this, in essence, what it does, it just makes what normally takes about 42 months on average to have a client start a debt settlement program and get them out of debt. It can simplify it to be, as short as 6 months by giving you all the money that is needed to pay for the client as well as your fees and get them out of debt faster.
So are you saying that it's possible, it's by getting out of debt faster, a debt settlement company might be able to reach a better settlement because it's a tighter and shorter time frame?
Yeah, so look, obviously, what happens is when we fund the special purpose account, right? You have all the money. You should have all the money that you need to start selling accounts, right? So it's a very big difference when you call somebody, you already have the money in, and you can try to negotiate the best possible deal that you can. And that time is what the debt settlement companies use to be able to go back to the creditors and say, hey, I can offer you this or that. Obviously, having the cash in hand versus not makes a huge difference on how you can take all the accounts and get them settled right away.
Mm-hmm. So tell me from a high level point of view then, what would be, if I'm a DSC, debt settlement company, what benefits do I have by participating with you in offering my services to clients, and just strictly from a debt settlement company point of view?
Right. So obviously the biggest benefit is you're going to have a lot happier clients, because obviously a lot of consumers come in and they're a little wary about, can they really do this? Can they really settle their debt? So the fact that you can come in and say, look, we're able to help you get a loan so you can settle their debt's a big win, right, for the clients. For that settlement company, also not having to worry about the overhead, right? The overhead, about 70% of the overhead will be sort of cut out, because if you can do a loan within 6 months, it normally takes 42 months. Those extra 35 months, you don't have to service that client anymore, right? You don't have to get all the mailers and credit card statements and all that stuff that everybody has to do, take all the calls. So by us coming in and being able to settle them all, that client is done and graduated. So it'll speed up the graduation sort of for your clients very, very fast. And that allows you guys to be able to capture your fees faster, as well as reducing your overhead. So it's kind of like, it does two things. It improves your cash flow drastically, but it also improves the experience for the clients, as well as your overhead gets reduced significantly, because you don't have to serve those clients, and you can use those proceeds to keep on remarketing and re-advertising, which is really, really good. I think that this satisfaction level is very high for clients, because now they basically went from having all these debts all over the place, getting calls, to having no more calls and having one debt. And it also helps you, debt settlement companies, by not having to deal with potential lawsuits that may happen along the way when you go longer, right? Once you settle the debts, then you don't have to worry about those lawsuits for your clients, which obviously are very painful for debt settlement companies. So there's definitely a lot of benefits from that end, and we feel very strongly about the product that we put together.
I think that what you said about the lawsuit is definitely important, because many debt settlement companies who my firm has worked with over the years have unfortunately lost clients because of lawsuits, right? And if they participate in a prepaid plan, they are protected. But if they are If they're not in the prepaid plan, then they have a problem. And one of the biggest issues that DSCs face is attrition, right? So if a client has made those 6 month worth of payments and is employed, it sounds like they're creating this little credit history within the debt settlement company, which is very important, and it creates a level of responsibility. The difficulty for especially the backends, for those of you who are the backends on this program, is, well, what happens if a person then loses employment 12 or 24 months or 18 months into the program? And by essentially trying to eliminate these debts, hopefully eliminate these debts within a shorter time frame, possibly with a much better return, right? Much better solution. Because from creditor's point of view, I'd rather get $5 now than $10 3 years from now, because the likelihood that I'll get $10 3 years from now diminishes, right? I mean, the person could end up withdrawing from the program, filing for bankruptcy, or I don't know, just anything could happen. So ultimately, there definitely are benefits for debt settlement companies and generally for consumers, as long as obviously these consumers understand the risks and are responsible consumers. So obviously, this is not the tool to be taken advantage of. But let's talk about then, if you could touch upon what are the downsides for consumers, right? We can't just say everything is just great and peachy, right? Obviously, we need to be mindful of the downsides. So maybe you could touch upon that as well.
Yeah. So obviously, one of the downsides obviously is once we do an actual, loan, right? It's an installment loan that gets reported to the credit bureaus, just like any other loan. So this is a regular loan that you would normally find out there when you go to the market. So one of the downsides, I think, is there's definitely improvement on the credit score of the consumer after we do a loan. You start seeing after 3 to 6 months of on-time payments, definitely there's a good improvement on their credit score, which means that a lot of consumers will have the ability to refinance and or get more debt, right? So hopefully they have learned their lesson. They become more responsible consumers, or they obviously dealt with a situation that put them in the first place, dealing with debt settlement. But there is obviously the opportunity for consumers to get more debt in the future. Which obviously, if they're not responsible, could become a problem over time. So it's kind of a good thing that we give them sort of the solution for them to get back on their feet and back in the credit world. But obviously, we don't want people to abuse that benefit by maybe just getting too much debt again. And that's always something that is that we cannot control, but it's definitely a potential downside that we see.
Okay. That's great. Well, let's move on to the boring part, the terrible part where everybody just begins to drop off because they said, oh, that's it. We just don't want to hear any more lawyers talk. But I'll make it really quick, I promise. And I actually really just 2 slides. And for those of you who actually want to learn more in substance, I promise you quite significant amount of materials at our program in Costa Mesa on November 7th and 8th. So hopefully you can join. But look, if you are a lender in this space, I just took 4 of the federal statutes that you just need to be aware of. I mean, mind you that you're scratching the surface of what you should know. Obviously, Truth in Lending Act, you need to talk about any type of percentage of down payment. If there is a down payment, you need to talk about terms of repayment and annual interest rate. I mean, that's a given. That's like the ABCs of any lending contract, okay? You need to be mindful of the financial privacy rule. Privacy laws have become a lot more prominent in the last few years, particularly with CCPA in the state of California and other states like Nevada, for instance, and even New York, now taking a more proactive approach in protecting consumer privacy. And therefore, you need to provide clear and conspicuous privacy notices. If you collect or if you sell or you disclose data to third party, you have to be mindful of the financial privacy rule. Again, this is a pretty complex piece of federal legislation, and I just wanted you to be aware of it in case you decide to say, hey, I could do this all on my own. And I could assure you that it's not very easy. Then what you have is the Equal Credit Opportunity Act, which means that you cannot discriminate, or you can't have practices that violate any type of discrimination based on gender, marital status, national origin, religion, or age. And actually, interestingly enough, when I say age, it doesn't necessarily even pertain to people above certain age to protect the elderly, but also those who are young, right? Because if you probably remember, well, I remember, I mean, that was decades ago in college unions, university unions, you always had credit card companies who would come in and offer you to open up credit card. That was actually my first credit card, was when I was 18 years old at Binghamton University in upstate New York. And finally, well, just because you are a lender, if you have a client that defaults, you also need to be mindful of the Fair Debt Collection Practices Act. I mean, you could have a full day seminar just on that, but clearly, if you have a client that defaults, you need to be mindful of that piece of legislation so not to get sued for improper debt collection practices. Disclaimers. Okay, whether you're a DSC, debt settlement company, or you're a lender, it doesn't matter. I tell this to all my clients. Your disclaimers need to be clear, right? I ask my clients, can you read that disclaimer? Right? I have certain clients copy and paste disclaimers from third-party sources, and it's written in legal mumbo jumbo where people would just scratch their head and say, I have no idea what it says, right? Can you read it? Can you understand it? And is it placed where a consumer can see it, and also in proximity to the offer, right? Just want to make sure that that it's not somewhere out there, you know, in the desert. That's kind of the end of my part. I know that there are questions, and I appreciate, but we won't take any questions. You could always email them to me or to Camilo. That's the end of the program, and I'll basically just, of course, plug in our firm's debt relief industry services. We work with companies from coast to coast. You could check out more on our website, and you should certainly subscribe to DebtReliefWatch.com. It's a free news information aggregator for the debt relief industry. I'm very, very grateful to Camilo for participating. It's always a pleasure, Camilo. And thank you for all those who joined us today.
Yeah, thank you all for your time. I'm happy to answer questions. If you guys want to email me or set up a call, happy to answer any questions you guys may have regarding the program.
Great. Thank you very much. And that's the end of our program.
Thank you, Size.
Thank you.